kick off by asking you about the impact that you see with oil trading where it is today and this constant volatility in the market. How's that impacting the stocks, across the region? Because you have a great deal of difference between what's happening from time to time in Dubai, for example, than what's happening in Saudi Arabia.
I guess there's a lot of push and pull factors as far as oil is concerned at the moment, right? There is a lot of confidence on the supply side of the equation of oil, I guess. So despite the Iran sanctions, despite declining production in Venezuela and Libya, investors have got tremendous amount of confidence on the U.S. shale production, which is at the record level. So I guess what's actually happening at the moment is like everybody's eyeing on the OPEC meeting, which is going to happen at the end of this month in Vienna.
We think so. They may change it. We don't know yet.
Of course. But I guess what's going to happen is the rollover of the cut is kind of a no-brainer at the moment. From the signals that we've been getting from the market and from the respective authorized people, it looks like the rollover of the production cut will continue in the second half of this year. I think oil should start trending back up towards the 70 levels. But again, it all depends on trade war, escalations, what Mr. President has to do with his tweets and stuff like that. So,
how big of an impact do you think that the geopolitical noise has had on the markets generally over the last couple of months? Because there has been a lot of noise, but not too much movement.
Like May has been a bit more volatile as far as geopolitical is concerned. We saw a steep correction in a few of the markets. But if you've been here long enough in this region, you know that these are just noises and eventually it will fade out, volatility is something which people like us, asset managers who have known this region for so long, who have been working in this region for so long, can stomach these kind of volatilities. We actually look out for very attractive valuation because that is when you can find some low-hanging fruits and you can start pouncing on them.
I think Matt has a question in Singapore.
Yeah, I do, Aarthi. Thanks very much for joining us. Well, where is that low-hanging fruit then? And what do you think is going to be a determining factor for the Middle East markets going forward over the next few weeks and months? Is it going to be what happens on the trade front? Is it what's going to be what happens on US markets? Or are we seeing a bit of a decoupling, and will Middle East markets really trade more on the fundamentals around oil and what we see out of OPEC, as you've been discussing with Hadley?
Actually, for the month of June, there are two main markets which will be in focus. One is Saudi and Kuwait. Saudi, the main reason would be that it's getting included in the FTSE Emerging Market Index, the 25% weight, and that will actually bring in close to $1.8 billion of passive inflows into Tadawul. And Kuwait, because we were expecting possibility of them getting into an emerging market standard by MSCI from the watch list. So these are the two main technical factors, and I think investors will be very closely watching about these two things. Beyond these two technical factors, fundamentally, I think they would tread with a caution, given where oil is and given so much of escalations on trade wars. I guess that's going to be a bit more volatile on the fundamental side.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.